The Hedgeless Horseman here. It's September the 21st, 2023. Just got back home from basically 3 weeks on the road or on a plane. Been to Bolivia, been to Colorado, and rounded up by going to Nevada. That's why I haven't been much active recently. Especially didn't have any time really to do any sort of videos, and I hate working on laptops. But it's funny. It's like, checked up on the market now and then. It's like, okay, seems to be pretty, I was gonna say brutal couple of weeks price wise or price action wise. Obviously by default, that's a buying opportunity, even though yes, I know that people stop believing that a buying opportunity is a buying opportunity if it takes a long time before you see any actual profits, or it actually goes lower. But I don't think, the average drop after I buy a stock or something is probably at least 30%, meaning that when I think something is cheap, it typically gets much cheaper. What tends to bail me out in the end is that I recognize that and simply average down in intact stories, I should say. You want price to go down without value going down. Otherwise, it's not the same. If there's some bad news and something goes down 50%, for example, then it's not necessarily a buying opportunity. It's just price went lower, not that it by default became cheaper. But it's like I looked into the gambler portfolio after I got back, and I think it's only up 9% or something right now. It was up around 42 or 42% just, I think, like 2-3 weeks ago. Obviously that's kind of funny, because if I'm not mistaken, I think none of the actual companies have gone down in value. There's been some positive news in quite a few of them, or at least unchanged fundamentals, but it went from being up 42% to only up 9%. That's a massive move. Perhaps for a portfolio that actually went up in value. Because metals haven't been going, down that much. Like today, gold is still around 1940. Silver, it's bouncing between like 22, 23 to 25. That's not much change. And of course, we know that it doesn't really matter what these or what the paper metals are pricing today, because most of these exploration stores won't be in production until maybe 5 to 10 years from now, if ever. That's when the actual value will be discerned, if you know what I mean. Now silver could go to $1 tomorrow, and still silver price could be $100 in 2 years from now, or 5 years from now, when one of these projects would actually get into production, and the actual value of that would be dictated by what the silver price is then, not what it is now. Even though yes, it will be priced differently by the market, because like the attention spans and all that for market participants is getting shorter and shorter, I would argue. So I think patience alone, or let's say the value of patience, has been going up in value and expected returns for years and years, maybe decades or something. I would say that the market has probably not been more stupid, on a marginal basis, especially in the more retail-driven sectors. Just look at crypto, for example, reached 1.5 or 6 trillion dollars or something. NFTs are down 95%, I think, in value. So a retail-driven sector can be absolutely batshit crazy. That's just how it is. That's the opportunity. That is the opportunity. Of course, it's driven by human emotions, and we're all humans, so we also get affected by it. It's just that we have to be one of the actual few who have a firm grasp of the obvious. And one obvious thing is that every single operating mine today will need to be replaced. Every single reserve in today's miners is going to be depleted one day. So literally all mines, unless we start mining asteroids, will be need to replaced by new mines, projects that haven't been built yet. But when you look at actual valuations out there in the junior space, which is supposed to be, I mean, yes, the majors have projects as well, yada yada yada, and not every company is listed, etc. But still, the sector overall is absolutely not pricing in that the mines today that are operating will need to be replaced. I mean, there are some really good looking projects out there, and almost none of them are priced like they will actually become a mine within the next 5 years. It's absolutely, something doesn't add up, obviously. And I would argue that it's the retail driven market that is setting prices which makes absolutely no sense, because some of these juniors have projects that will need to be mines, because we need mines. And of course that's the opportunity. We can complain and bitch all we want about this market being frustrating, it goes down so much, share price action is horrible. But that is literally also, without that, we wouldn't be able to get some so outsized future returns. We can't have great returns in a rational market, because in that case the prices would be fair. There would be no value. I mean, it would be no point in stock picking if everything was rational, if everything was priced exactly like, reflecting the value. And of course, here's where we are. This is an extreme. We hit a real extreme already, a year ago from now. I think yes, we had a short stint up here, etc. But like for over a year at least, this sector has been batshit crazy, I think. And of course, most projects will never amount to anything. That's a given. Still, we know how this sector works. During this period, every single junior out there, even though 95% of them have projects that will never amount to anything, they still went up hundreds of percent. This is, as I've shown a bunch of times, this is obviously why Pierre Lassonde calls it the easiest sector in the world. Because you don't even need to be right, let's say, on the fundamentals. When we are in a bull leg, everything goes up. You can pick the most horrible stocks imaginable, juniors. If they're still around, they're gonna be up. And the same goes for when we go into the next bear leg. So we're still having problems killing this bear. And of course, everybody's bitching and all of that now, but when we're up here again, 95% of people will look back and say, oh, I wish I bought that low. Even though when it actually happened, like now, they will be like, this sector never works, it's never gonna turn around, this is evidence why you can't make money in this sector. Whereas when we get here and look back, we're gonna see it's like, all right, that's why you can make a lot of money in this sector. Because literally, when you go from a low to a sentiment low to a sentiment high, especially a depressed low like this, we make more money than we should. Simple as that. Now we are on paper losing more money than we should, and we're gonna be gaining more money than we should sometime in the future. That's just how it is. The play is obvious. This does not say anything about the short term, not even the medium term, I would say, but longer term, absolutely, it says everything. The whole opportunity in this chart is when we go from here to here. We don't know when that would happen. Look at this move in Bear Creek here, for example. Obviously, this is a proxy. I think this was like a 200% rally in just a few weeks. I thought this was the bottom. Obviously, we're not at the bottom. And just this fall starts and coming down again. I mean, we're losing people all the time. The longer this volatility keeps on without anything really changing, there's going to be net selling because people can't take it anymore. That's how it is. But to give some perspective, look here in the 2006 bull run. In this period here, Bear Creek topped here. And then it started to turn around, up again a bit, down a bit, lower low, but then a higher high. So this was obviously a grinding top, let's say. This top, actually, this topping pattern, it took 553 trading days, basically, from the top to when the big reversal came. And when it came, you can see here how quickly it went. I mean, absolutely frustrating action for a bear and for the bulls too, I guess. But once that was resolved, straight shot all the way down. Jesus, I mean, that's just crazy. So I would say we're in an the opposite situation right now, or the mirrored situation. It's taking a long time to kill this bear, but this bear is gonna die. And we've had lowest low here so far last year in the sector. I mean, some juniors are actually lower, so I mean it's not. This is again not. This chart is not representable for every single junior, but I think it's does its job at least. So far, from here to here, where we are today, is around 322 trading days. So this grinding top here before the total reversal took 200 days more than we have been in this bottom formation. So let's say we are here right now. I mean that this is here, but flipped. Everybody's, let's say and we were bears here, so everybody's bitching and moaning, oh, it stays up forever, it's never gonna turn around, you can't kill this bull, yada 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 yada. Okay, and like I had a talk at the Colorado School of Mines recently when I went through I went through this chart and I had like 15 slides or something. But my point being, which I've said a bunch of times, who cares how long it takes? How long should you be willing, if you were a bear here and this was unsustainably high prices, how long should you be willing to wait to net a 91% return on your shorts? And this is, I mean, the downside is capped. That's the thing. The upside here is not capped. A junior can go up, I don't know, this was like a 2000% run. So if you you should be able to wait a long time for a short to reward you with plus 91.74%. Imagine how long you should be willing to wait for a possible run like this, 600%. If you knew the next leg up would be in, let's say, 2026, you should be more than willing to wait for such a return. Of course, it's not as simple as that, because there's dilution, etc. I mean, depending on which company you own, some will dilute a lot, some will dilute less, yada yada. But if you have a growth company, for example, let's say the market went nowhere in like, I don't know, until 2026, but you were able to pick companies that grew. So yes, even if dilution kept up with value creation, so share price went nowhere, when 2026 comes, you still would get, let's say 600% return. So it's like the impatience out there coming from people. They have no idea that this is going to happen, that this sector is actually never going to die, and we're going to have a fat rally sometime in the future. I mean, when you think about it, it's so obvious. So again, how long should you be willing to wait for a mean reversion in this sector? And again, a mean reversion, when this sector goes on a tear, well, it passes mean reversion and actually goes to, you know, past fair value and all of that to a high. And we should be happy if the next big rally comes in 2 years, is what I'm saying. Really, really happy. The market average is 8 to 9% per year. So people bitching about, oh, you know, it hasn't turned around yet. Oh, what if it's a year or two before it actually turns around? That's coming typically from people who, I mean, if you look at their long-term results, they never made money, which is kind of funny because, like, the most impatient people are the ones that don't even have any good long-term results, and they'll never figure out why they lose money. They always think that, okay, you know, yeah, my past returns are bad, but I have to make it back by, you know, having my portfolio go up in value all the friggin' time. They need a trend like this that continuously is telling them they've been a good boy and they've done well, and that's why, you know, the market is rewarding them, let's say. They need that, you know, constant price appreciation to think that they are doing what's right. They need the market to suggest to them that they're doing something right. If you're buying averaging down in a sector this cheap, the market is, I mean, it's suggesting that you're doing something wrong because price is going down. But you are not doing anything wrong. It's just people making increasingly bad mistakes. And like I said before, I mean, this was the lowest point with the highest returns. And obviously somebody sold that. And it was allowed to go down this much and provide this kind of spectacular, obscene returns that should never even be possible really in a sector, in a marketplace that's supposed to be rational. Because there was not enough people that thought this was a buy it. And then boom, up, and then momentum takes care of the rest, because the people who sold here are the same people that buy all the way up. We're front running the next inevitable leg up, and then the momentum traders are going to get in, and then everybody else is going to get in. Because I talked to a lot of people who got in this sector here around the highs here of 2020. So all they know is a bear market. And you can forgive them in that case, because in their lifetime in the market in this sector, they've only seen a bear market. So that's how they think this sector always acts. Like it's a bear market. No good news get really rewarded. Every single news is a liquidity event. That's because they haven't experienced the flip side yet. That's gonna happen. You can look at the Barron's Gold Mining Index for 100 years. If you just started buying that sector every time it was down 50%, or that index, and just averaged down, didn't care when the bottom was in, just bought, you would have made money on every single trade like that. Just from buying cheap and averaging down if it gets cheaper. This is the easiest sector in the world. If you just have a firm grasp of the obvious, meaning where the next big move is going to go, and you're on board, as long as it takes until it happens. You think I'm going to be surprised to make a lot of money from the levels we're seeing right now? No. I would be absolutely shocked if I couldn't, continuously beat this sector forever, because human nature will never change. We're going to see these patterns over and over and over again. From hot to cold, to 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 hot to cold, forever and ever and ever. If you just understand this lesson and have infinite patience, there's no other way than to beat this sector. And a caveat to that is, if you think you're just going to buy any crappy junior there is, and just, that's enough work for me, now give me the 500% returns or whatever. That's not really how it works, because there's some juniors that are going to go bankrupt. There are some juniors who will dilute the shit out of you if this takes 1 to 2 years extra. Although it's like, I think a lot of juniors out there, even if you dilute them by 50%, I don't think it will be a problem. But point being, or the important point is, we know where the next big move is going to be. It's going to be up. We don't know where the next week's move is going to be, or the next month's move is going to be, or even possibly within a year where it's going to go. And again, here it grinded for 553 market days before it really turned around. And then everything was worth it if you just held on. And I've shown this before, that if we take Bear Creek Mining, for example, if anyone just started buying here and just bought all the way down every single time since 2005, you would have at least 100% return within 2 years, which is much more than most people can say, even though it sounds too low. So this is no brainer, and I get it. It is frustrating. I mean, it's, if you look at the paper markets, like today, where we had a flush, or when we had a flush in the metals, and you go on Twitter, there's pandemonium. Everybody's complaining about the sector. How do you not get negative on the sector if you read 95% of people's opinions, etc.? It's almost impossible. But if you didn't even have access to the, let's say, charts, and didn't read other people's comments, and just looked at the presentation these companies puts out, like what do they actually have? What's the market price? You would come to a completely different conclusion. It's people's emotions that sway other people. And they're obviously not thinking too much about where the next big move is going to come. They want to look right, again, all the time. That's how they feel comfortable thinking that they're right. Even though, are we after a enjoyable ride, or are we after maximum amount returns? I'm after maximum amount returns. That means I must accept that that I will look very stupid on average for maybe years before the actual payoff comes. And it's hard for the ego, because we want to, I mean, the more effort we put in something, we want better returns results, even though Fidelity's best investors are dead. So, I mean, it's hard to do much action or trade when you're dead. Still, they outperform the living, which means that, again, investing is one of few human endeavors that actually favors inaction. Anything else, like if we want to get in better shape, we better, work out more, eat less, think more about what we eat. If we want to learn a language, the more we study, the more we probably will learn, and all of that, except for investing, where we believe that the more action we do, the better our returns are going to be, which is typically false. Every day you don't do anything, you're outperforming 95% of people. That's a weird thing to think about, but like most people's portfolios would have better returns if they were on permanent vacation, or at least, let's say, they checked in every 3 months or so, checked up on the company fundamentals and all that. It's like the hodl portfolios I have for my family. I'm not as active in them, or I'm not very active at all, but still, they're outperforming the GDXJ in juniors. And juniors are down here, whereas GDXJ isn't that bad. Without much effort, I basically just look, okay, can this company grow over the next 1, 2, 3 years? Yes, I think so. Is it cheap relative to what I think it can become? Yes, I think so. So you hold, because the case is typically 1, 2, 3 years away, unless it gets very expensive in short order and actually is pricing in that 1, 2, 3 years of growth, which does not really happen right now. And yes, like on the whole point of, let's say, I mean, buying cheap. Price is what you pay, value is what you get. Goliath is a story that's pretty much gotten better and better, perhaps a lot better in the recent months. you would never have guessed that if you saw the share price action. You think this was the top, this is when the project looked the best, or this or something like that. It's actually down, let's say 50%. But when you actually look at the news releases, it's like, okay, they're hitting recently abundant visible gold. So they found a new Golden Gate feeder discovery, which appears to be Bonanza. Golden Gate zone, volcanic hosted here. I mean, this was the whole play in the beginning. This is all we knew about when it reached the highs here. Then the Bonanza shear became a target, and now we've hit what appears to be the best zone yet. And of course, what is typical is that, I mean, you typically don't hit the best hits on the first tries. And we don't know how big this is, etc. But in 2-3 holes or whatever it is, at least 2, they hit abundant visible gold up to 1%. And recently we saw, I think yesterday or today, private placement was announced. Kresker is doubling down, and Mr. Rob McEwen is getting involved. Why is he getting involved? Because he thinks it's too cheap. And mind you, when we see stuff like, you know, let's say, Goliath is up a bit on the latest news, and people were like, yeah, you know, it's up, let's say 15%. I mean, it's up more from the low here, 25%. And people were like, yeah, you know, it has moved or whatever. I mean, the thing is that typically in a bear sentiment, even if you have an uptick, it's typically subdued because you're starting off from such a low price point. I mean, imagine, let's say that before this Golden Gate zone now was discovered, and we don't know how much that would be worth. It could be worth, in the end, almost nothing, but I highly doubt that, given that everything else looks like it's going to be a mine, and then they would for sure mine the Golden Gate Bonanza zone, even if it's relatively small. Still, let's say that the value before this discovery was up $1.5 per share. This is just an example. And with the Golden Gate feeder discovery, maybe the implied value went up to $2.25 per share. I think that's going to prove to be low, but still, let's assume that. So in that case, yes, we had a 15 to 25% pop. But the price to value is actually increased. Let's say it was, from the bottom here, let's say the price to value gap was 146%. Price went up, and most people say, you know, okay, it's gotten more expensive. It's like, oh, it actually went up on the news. Yeah, but maybe the price to value gap after the rise is still 197% instead of 146 or 56% or whatever. So yes, this was a lower price, but with the new information, it might be cheaper today after the pop. That's the thing. And this is why it's like being an insider in this sector. Because some stuff you will see out there doesn't reprice at all. So in that case, if Goliath had not gone higher at all, the price to value gap would be a whooping 270%. And before that, before the discovery news, it would be 146. So imagine you have 20 different holdings in this piss poor sentiment environment where nobody thinks straight. Everybody's looking for an exit. Everybody's looking for some volume so they can get out of this sector because it doesn't work, and they fear whatever. You know, well, the typical fears that I think it's gonna go lower. I mean, that's what literally that's why everybody sold all the way down here and nobody put in money, because they thought it could always go lower. For a time, or I mean, they were right for a long time, but still, if they sold out here, etc., who knows when they would be buying back? Whereas the people that only averaged down, maybe they, I mean, started buying heavily all the way down, and they decreased their average to whatever. It's like from here to here or something. They would have made a ton of money. Yes, they looked stupid, increasingly so, and took a lot of price pain. In the end, they would make more money than the bears. I'm pretty sure about that. Because again, like I've also shown, people are, I mean, you hear this all the time, you know, I'm going to buy when the sector has turned around. Who wouldn't think that the sector turned around here? So instead of averaging down, somebody, let's say they sold here and bought up here instead. Yes, congratulations, you did not get to the plunge down here, but you didn't buy it either, whereas the person who just bought all the way down maybe has his average down here. All of a sudden it pops. Okay? This person went from, you know, loss to, let's say, a small gain. And the person who avoided the short-term paper loss, he bought in here. So now he has an average up here, whereas the person that averaged down has an average down here. Okay, then this appears to have been a false rally. Might not be in the start of the bull market, or maybe it was and this was the low, but still. Said person today, for example, would have been down 59% in just, you know, a few months. Whereas this person averaged down, he might have averaged down all the way, let's say, and, you know, maybe he didn't buy as much up here, but now he's averaging down again. So he might not really be sitting at much of a paper loss, whereas this person just, you know, shed 59% or something like that in just, you know, a few months. And then he's going to try to do the exact same thing. And again, I know a lot of people sold this low here because they thought it could go lower. This sector should go up tomorrow. If it doesn't, and it goes lower, and the bear lasts longer, the only thing we know is that for every passing day, the inevitable bottom tick, the absolute bottom, the best buy in maybe the next 8 years is getting closer. Price going down, one extra day of downturn is getting 1 day closer to the inevitable bottom. And we don't know where it's going to be. So I've shown this before. It's like, I mean, the worst case scenario is that the sector gets cheaper for a while because we know the turn is going to come. So who cares? I mean, really. If you can stomach a paper loss from here just to make sure you're on for the next big move, then I don't know how you're going to make money in this sector. Because this could turn around any day. Any day when we're at this extreme could be the bottom. And here we had a, you know, false, let's say false start, higher top, and then the real thing began. We don't know when the real thing is going to come. But if you short, if you just short all the way through here until the inevitable downturn came, you would make money. So what I'm doing, which should be obvious, is buying as much as I can, as low as possible, and make sure to follow the actual company news. Because, okay, back to my original point, if you have 20 stories, 10 of them release a string of positive news. Share price doesn't go anywhere. Okay? 5 of them produce negative news. They get punished. Okay? 5 of them produce no news or net neutral news and doesn't go anywhere. Obviously, the 10 that has strung together a streak of positive news items with price not moving are going up. The price to value gap and opportunity is going up a lot, even though the market is suggesting that nothing changed for them. They didn't move as well as the companies that provided neutral news didn't move. But in the ones that provided good news with price unchanged, the opportunities might have gone like this to this. So if you value shuffle, let's say you sell some of the neutral news, or actually sell some of the juniors with negative news, assuming that value went down enough. So if the price to value gap was here, maybe value actually got down to here, and yes, price went down, but it's like, okay, that's a bad example. Let's say price went down to here. So they might be buy, but not as much of a buy as the companies with neutral news and neutral price action, and certainly not worse than the companies with neutral price action but positive news. So in the short term, at the time you reshuffle, you won't see a single, well, the portfolio value will be the same, because if you sell, let's say, 1,000 worth of stock with this kind of expected future returns, and buy cases where with this new higher expected returns, when you sell 1,000 and buy 1,000, nothing in your portfolio changes. It's just the holdings that changes. Or more importantly, the future portfolio changes. You can't see the change right now because the revaluation has not happened. But if you would get heavier into the 10 place where price was the same and value went up, your future portfolio is going to be worth more than if you did nothing. So this is not a time to look at juniors out there and just say that, well, price went down, or oh, this is not working. They released good news and nothing changes. And just bitch about it. Maybe you sell out. It's like, oh, this isn't working, whatever. You're missing the whole point why the big money is made in bear markets. Why the Lundins, Rossbeatis, McEwens, etc., how they are able to, or any legendary investor like Warren Buffett or even, you know, Rothschilds, etc. What they did was buy cheap. That's what they got rich because they bought a lot of stuff. I mean, there's a bunch of other stuff involved as well. It's like, who knows, you know. Let's say some, especially in Rothschild's case, it was probably more than just buying cheap. They actually created the bear market, but still, they would not have become rich if they were not able to steal value, buy stuff for a price that was much lower than the stuff they bought was worth. So it's a requirement to have bear markets. They love bear markets. Some of them even created their own bear markets just to be able to buy a lot of stuff on the cheap. And we're sitting here bitching about legal stealing because the sector valuations makes no sense. I mean, take Western Alaska, for example. When I think I was up at Beaver Creek, I got a message. Somebody said, you know, I just bought Western Alaska sub $1. I'm like, oh, that must be a typo there. I mean, there's no way that Western Alaska, on no news that I could see, went actually down sub $1. Yes, it did. It was down to, I think it touched 94 cents. So if you look at this chart, you would think that, man, woo, up here, I mean, this story was the best thing ever, and my God, the project must have looked good. And then you look at this, and you must have thought, well, this was probably a pump and dump, or yeah, there was no substance to this move. Everything's gone to shit recently, because otherwise, how can you explain, like, you know, 482% rip in price, and then all of a sudden it's like an 83% drop in price within, I mean, it's not 1.5 years, or yeah, something like that. Actually, things have not changed that much. They still have a district scale, well, they have 2 district scale projects, but it's like, this is the retail market. This is, in my opinion, absolutely absurd. How many high-grade CRD systems are you aware of right now? And I know some people believe that what they've only drilled so far already, excluding the last hurrah, which they've not technically hit yet, it has 100 million ounces AG equivalent of high-grade stuff. You know, let's say 800 grams per ton AG equivalent. It's absolutely ridiculous. That is the market we're dealing with. Huge overshots, perhaps. Huge undershots. Just like the sector overall. Overshot, undershot, overshot, undershot, overshot, undershot, overshot, undershot. Nobody's actually looking or thinking about anything than where the price is going, the trend. And when you have people getting increasingly frustrated with a sector, so more every day this sector does not go up and reward people so they feel good about themselves, it's gonna lead to more negative sentiment. People are gonna turn to the selling option more and more. And if you have a very tight liquid stock like this, you can see what can happen. This is when people were on the mood to buy. This is when people is in the mood to sell. And again, it's momentum that drives more momentum, and vice versa. There might be, who knows, one person with a pretty decent positions that needs to sell this or whatever. And there is not enough buying power or money out there. I mean, it's like me. I'm all in all the time. So I have to basically sell something to buy something else. And how many do you know that operates like me? I don't know many. I don't know many who are like, I'm all in, love this market, love this sector. If I had, double the amount of money I have right now, I would put that all in the market as well. If I had 10 or 50 millions or whatever, some of these stores would never be allowed to get as cheap as I think they are right now. But this is the whole thing. Let's fast forward, I don't know, 2 years, and let's say silver is up at $35 at that point in time. Let's say Western Alaska have grown. Do you think the market will price this as low as 60 million CAD or something? I don't think so. I think this is one of the best silver discovery stories around. And this, like all the other good projects out there, are pricing in that there's no real chance that they will ever become mines. And then again, you have to ask yourself, well, all these mines that will need to be replaced, which projects will actually replace them? If the best looking ones out there are pricing in like they will certainly never replace them. Now it does just not add up. Magna Mining. They drilled, I think, 5% nickel equivalent. Or what was it? 7 meters, 5%. What's that? I mean, that's like bonanza in gold equivalent. There were some misses, there were some hits that were good, and yada. Point is with Magna is, but they all, based on what they already, if they made no additional discoveries or didn't drill any more good holes or whatever, they would still be cheap. Like I said before, Magna, I think, has a market cap of 88.88 CAD. They have, let's say, 18 million or 19 million in cash. Market enterprise value of 70 million Canadian for 2 advanced assets in Sudbury when major miners and OEMs are scrambling to secure first class 1 nickel. They're pricing in the lower end of the range that Mitsui a year or 1.5 years ago put in terms of implied value for Shakespeare alone. This is absolutely crazy. It's absolutely crazy. Again, same as with Western Alaska. If you see this chart, you could never have guessed what the actual news releases would be. That's why it's like this sector does not make any sense. A trained monkey can beat this market because it's so friggin' dumb. It's totally driven, or a lot of the time it's only really driven by momentum and trend. You would think that, whoa, okay, it looked good here, now it's all gone to shit. It's more advanced. They have a bigger resource today, or they will have a bigger resource today. Nickel prices, yeah, they're down from when they were up here. But like, the stuff they have, like, 2% nickel equivalent underground at Green Hill, I mean, they're gonna make bank on that, these prices. So it doesn't make sense, and you have to be fine with that. You have to be fine looking stupid. Otherwise, again, it's like when you hear some people talk like the Pierre Lassans and all that, when they describe their big wins, or Rick Rule, they talk about, well, I was able to buy company X at this price. It always starts with them buying something at a ridiculous price, where you're like, in hindsight, you're like, oh, I would have bought that. Man, was that crazy. Well, at the time, almost nobody thought it was crazy because they did not believe their eyes. They believed the retail-driven stock market. They believed that things had, gotten worse. They believed that the market is always right. I think the market is absolutely insane. I think it's a bunch of emotional monkeys basically setting prices in the units right now. I don't believe a single word out of Mr. Market when it comes to setting fair prices right now. I'm betting heavily against Mr. Market since I'm all in on the long side in this sector. I think it's batshit crazy. I think I'm gonna make a lot of money from this level, like I did from this level and this level and this level, and people who were in here made money. I'm not gonna be surprised at all. In the meantime, again, there's nothing much to do. This is a batshit crazy sector. This is going to turn around when it turns around. And it's not, again, really news driven. It's emotionally driven. We're front running the next inevitable trend change and what happens to people when they see a new trend. They're going to just be piling in because everybody wants to be in the sector that works right now. So when they get in, maybe up here, will probably be up under 155% already. And when they, let's say, for a time being, are up 190%, they feel really smart and say, well, I avoided all of this. I'm so smart. I got in when I got in, you know, when the trend was up. So they're sitting there, it's like, yeah, this is easy. I'm the king of market timing or whatever. You know, I'm up 191% in whatever. Yet the person who just was buying here, buying all the way down, increasingly so because they recognize the price to value gap got higher. Maybe their average would be down here. So who has bragging rights really? It's the people that make the most amount of money long term. Not the most people that make a good return in a short period and then, give it all back or whatever. Because they're going to be buying more and more the more this works. This sector should never have been up here. Bear Creek Mining should never have traded at whatever it traded at. But it did. This was the hangover. Now we're down here. Imagine what now there's juniors where you can buy for $2,000 and see the share price go up 15% or down 15%. Imagine when $2 million wants to get in. You have no idea how quickly this can change. And it's not going to be based on some typical fundamental change necessarily. It's just going to be driven by the herd, human emotions. When they see momentum change, they're going to be chasing. And up here, everybody's thinking about how much more they can win. So up here, blue sky potential becomes very important. If there is even 5% chance of some blue sky materializing that could make this price look cheap, they see it as a reason to buy. Now everybody's looking for reasons to sell, and the typical reason, actually nothing to do with fundamentals, it's just that they have a feeling it can go lower. And they will never figure out why they never make any money over the long term, because they can't even see the obvious. They can see the obvious case, which is when we go from here to here. Says nothing. We can look stupid for months more, years more. And still, we're going to get rewarded in the end, as long as we don't just buy, companies that go bankrupt or dilute us down 70% or something. Another one's like, okay, Juggernaut, okay, that went up here and now it's down. Okay, let's check in on the news. Well, Juggernaut drills multiple broad intervals of strong sulfide mineralization up to 72 meters. That sounds pretty promising. Juggernaut drills multiple intervals of strong sulfide mineralization up to 8.19 meters. That sounds encouraging. Would you think that those would have been the news items if you look at the recent price action? 54% in a little less than 2 months. Did the case change by 54%? Did all the potential out there, given the visuals so far from two of the 3 projects, I think. Did that go down 54%? Did it go up whatever this was? 71% here. No. It's the market being the market. It's going up. Okay, I'm getting more and more bullish just because it's a trend. Okay, it's going down. I'm getting more and more bearish just because it's a trend. I mean, literally, the market is this dumb. And it's not too far away that we're also in tax loss selling season. I have never seen, this is by far the best buyer's market I have seen since I started in late 2015. This is absolutely bonkers how much value one can steal. It's basically a retard bingo. And the frustrating thing is that every single stock gets cheap at the same time. So I have no problem finding buys. The hard part now is what are the best buys. Like I explained, Goliath Resources. Companies providing positive news when price doesn't change. Might change the case by an order of magnitude. So at surface, it doesn't look like anything is changing because price doesn't change. But the actual opportunities are going absolutely high wire and ballistic right now in this kind of environment. Because you can either change a case by price movement, risk reward, or the reward side. And sometimes you even see good news get rewarded by negative price action because people see it as an excuse to sell because there's some volume. So I'm telling you, it's like, this is not the time to throw up your hands and think because nothing appears to be happening because, quote, all juniors suck. Underneath the opportunities, the opportunity cost, the risk reward, the price to value gaps, they are going absolutely ballistic every single day when we have big volatility. That is why my portfolio has typically gone down 50%, but I'm proactive when it crashes. I realize that some are cheaper than others, so when the turn comes, my portfolio typically goes up like 300-400%. But if we had a crash and I did absolutely nothing, didn't care about the fact that, hey, well, every single story went down and some, some even got better, some were neutral, some even got worse, yada yada. If I'm not proactive to call bullshit on the price action and actually think that, hey, what is the actual value here? Okay, I see price went down 50% in these 10 juniors, but I think, 3 of the juniors, they've actually gone up in value over the same time, 2 have gone nowhere, 5 might have actually become worse. Well, the 3 that went up in value but still, went down 50%, they might have gone from, expected return of 150 to 400%. So again, you don't see it at the time when you're doing the reshuffling because, you're selling for 1,000, buying for 1,000. The future portfolio, though, might change dramatically. We have to be proactive. It's like Inflection Resources. I recently talked about them in a K report. I don't think it's up yet. 18 million Canadian market cap. 24 targets. 2 million in cash. Okay. That is 18. 18 minus 2. That's an enterprise value of 16 divided per amount of targets. 0.67 million Canadian per target area. And each target area might have up to a dozen targets. Or Anglo Gold has an earn-in. Think about it. $0.67 million is attributed if you will just take per known target. And they have more targets without the joint venture, and they have the gold, the Caron Gold project as well. So it's actually more targets than the 24 target areas. Still, 0.60 got them 7 million Canadian per target within the Newcrest joint venture. Anglo Gold earning. Mathematically, that is absolutely retarded. Do you think? The 0.67. Okay, so that's pricing in what? Even if we assume, they're obviously chasing for like $1 billion plus targets. And we know, the fact is that we know there's Cadia around there. Cadia is worth 10 billion. North Parks and Koval, who knows, 2 billion maybe, even at this, or they would be worth that amount even in this, copper is not up that much, for example, or maybe 1 billion, who cares? So, Inflection would get 25% plus a royalty plus carry to PFS. How much is that worth? A royalty on one of these big projects could be worth, hundreds of millions alone. Let's say 300 million. Okay, so 0.67%, let's do it like this, 0.67 million divided by, let's say, 300 million. That's pricing in a 0.2% chance of success per target of finding something, let's say, worth 1 billion. 0.2. Do you think Anglo Gold would at all be interested in doing a deal with Inflection if this number is accurate? 0.2% chance per target. And a combined target chance of finding one, let's say, across that whole land package of 0.5%. 0.5%. One in every 200 times. So they would have need to buy, or they would have needed to do the exact deal they did with Inflection and 199 other juniors with the same land package to mathematically come out with at least one, or reflecting one discovery. How in the hell does that make sense? So they would need 24 times 200, 4,800 target areas. This is absolutely batshit crazy stuff. So either Anglo Gold and the Inflection team are absolute retards. Some of the worst target generators there is, worst geologists in the world, or the retail market is absolutely retarded. Obviously, I think it's the latter, given, all the evidence we're seeing and the fact that a trained monkey can beat this sector. I have no idea how you're expected to lose over the long term in this sector. How you lose in the short term, and the short term can be up to, obviously 3 years. Fine, no problem. We won't hold it against you. But long term, if you just don't sell down here, if you actually buy somewhere around here, or at least buy more than you do up here, how on earth are you gonna lose except you pick the shittiest juniors around and you think that's enough work for you and end up with whatever? No, this case, it might be 3 years before we reach a high. A meaningful, medium term / long term high. Up to 3 years of just holding the cheapest stocks we can find. If you lose money, then I don't know what to say. It's like, that's probably not gonna happen. But how many can actually do that, quote, simple thing? Do some due diligence, try to pick the best or the cheapest companies you find, and wait 3 years. Especially if you waited 3 years already or seen only 3 years of misery so far. Now, this is an absolute layup. You need a PhD. You'll need a PhD to overthink this too much. Well, actually, everybody overthinks this too much. Just absolutely crazy. Stop. I mean, when you see all the people out there commenting, oh, metals are up, it's a new bull, metals are down, it's a new bear, run for your lives. It's like, that is noise. That is noise. Almost every single opinion you will hear. I get opinions thrown at me on a daily basis, and I know it comes from people who don't have any idea how you beat this sector. But they have no problem telling me how you actually beat this sector or what you should be doing. But ask them for, okay, so you must have really, good long-term results in that case or something. I mean, how you really know how you beat this sector? Of course they're not going to show you. In theory, they think they know how to beat this. But they're overthinking everything. It's like I said in the presentation at Colorado School of Mines. I don't even know what the Fed fund rate is right now. Why do I care if they're going to raise or lower? Everybody wants to know when it's going, in what direction. And I'm talking short term. Who cares? We're so cheap that it doesn't matter if we have to wait like 2-3 years and it's going to be worth it anyway. It can't get much easier than that. So look at everyone who tries to guess every single market direction, whatever. They have no idea what they're doing. They might have gotten lucky once or twice, but they have no strategy. Because there's millions of people who tries to guess the macro, etc. While it's so beyond obvious that who cares what the Fed fund rate is if you can pick up some of the better projects out there. I mean, I'm talking, the top decile or whatever in the actual juniors, because it doesn't matter what the price of gold or silver is. The top 10 best projects are going to be the one that's most likely to be needed to go into production one day. So if everything is priced as shit, then we know that we will need mines built someday. Or if the market is right, there won't be any supply in the future. Obviously metal prices would go way up. It's just absolutely crazy. And it's like Headwater. Okay, let's check in on the share price action lately. Down, and I visited Headwater recently. Down 38%, almost 40%. Okay. Down 40%. Okay, let's check the, and neutral since June. So neutral for like over 3 months. Let's check in on the latest news release. Okay, Disco Zone from Spring Peak. All 8 holes encountered epithermal veining in the model target zone. That sounds pretty friggin' good. Midas North, which is the grassroots, huge target area north of the legendary Midas mine complex, which probably was worth billions when it operated. And from what I've heard, saved Barrick's bacon pretty much, because it made a ton of money even at very low metal prices. Both holes were drilled below Big Opal sinter targeting epithermal veining, and both intercepting epithermal alteration and veining at depth. We don't know the grades, but there's an epithermal system there. So they just proved that yes, there's epithermal alteration and veining. Do we think that they're going to drill the best holes ever on the first 2 holes they even try? No, but it's a big friggin' deal to know that, there is a vein system down there. Mahogany. 3 of 5 holes encounter veining and vein bridges in the model target zone. That's also pretty goddamn good. I think I remember Quinton saying that, an epithermal system might have 50% hit rate or something. And that would be, normal and, let's say, good. Here you have 100% hit rate so far, at least in veining. Of course, we don't know the assays, so one could argue that, yes, we don't know the actual assays. But extremely encouraging, very encouraging, well, extremely encouraging since it's a grassroots. 3 of 5 holes, that's a good hit rate if that delivers as well. Katie, Most holes encounter significant epithermal alteration, structurally controlled breccias and epithermal veining. Assays are pending. So they hit something on all 4 projects. We know Spring Peak already. We know it hosts high-grade epithermal mineralization. We know Katy has really good epithermal. Well, we know Spring Peak and Katy both have, you know, up to an ounce per ton, like 30 grams. Grassroot discovery. Well, we're waiting for assays, but a kind of, you know, technical success. Mahogany, they've hit something before. 3 of 5 holes. Don't know the assays, and you read. We are extremely pleased with the progress of our 2023 drill programs. The company successfully maintained a high pace of drilling activity on multiple exploration projects, which is a strong testament to the capability of the Headwater team. And yes, I was very impressed by the Headwater team. Apparently they have very, very good drillers and all that. The initial geological results from this year's drilling appears to validate our targeting, and we are eagerly awaiting the assay results from the holes completed thus far. Our geologists are particularly impressed with the geological continuity in the initial 2023 drilling at Spring Peak, which is the most advanced project as well. With up to 20,000 meters of planned drilling across the Headwater portfolio, we believe our shareholders have a unique opportunity to see additional value created through multiple potential catalysts. Share price is market cap is 20 million. Let's say they have around, 2 million in cash. Obviously, Newcrest is funding the Newcrest earnings, so that's 18 million. 18 million. They have 11 projects, but even if we just assume we take the 4 known, the drilled projects, so that's like 18 divided by 4. 4.5 million is priced in per 4 of the active projects. 4.5 million per project. Does that make any sense? Three of them has Newcrest involved. Four of them, they already know there's mineralization and they seem to be hitting more of it. Is there a guarantee that they will have 1 or 4 or more actual mines, Newcrest, sized mines? No, there's no guarantee. But this Mr. Market right now is pricing in no chance in hell that Newcrest knows what they're doing or Headwater knows what it's doing. And given the incredible hit rate visual, at least so far, market hasn't done a single, it says done jack shit. So we just assumed that, well, of course they were going to hit on all, of course they were going to have extremely good continuity at Spring Peak, and of course they were going to hit at Midas North, and of course they were going to hit at Katy, and of course 3 of 5 holes were going to hit at Mahogany. Bullshit. That's a really good news release. So we're to believe that odds of them proving up a mine at any of these projects is unchanged after this news release. That is complete horseshit. For all we know, there might not be a epithermal system below Midas. For all we know, Spring Peak, they would find nothing else. It would just be a small pod. So this is the bullshit I'm talking about, where value obviously goes up, even if we're, risk adjusted, because believe me, we don't know that Headwater is going to have 1 to 4 or more mines. They have 11 projects in total, including Lodestar, which is to the north of Spring Peak. That we don't know. But we sure as shit can know that the odds went up after the recent news release. But again, the absolute retard of a market doesn't do anything. There is nobody out there buying. There's nobody listening right now. There is nobody that has the fortitude to buy. Or they don't have any money. So the problem or the challenge right now is not to find a buy. The challenge is, which are the best buys? how much did Headwater go up in implied value? You know, if I have a other company had the same position size, they did not release any positive news while Headwater did, should I simply sell a bit of that and, you know, take more of Headwater, etc., etc., which can dampen, you know, the if you need to sell something else, it might, what you sell might be a buy, but there's, you know, degrees of buys, etc. But this is the stuff I'm talking about. If this was a hot market, if this was a hot market, you better believe that Headwater would be up on that news release. You better believe that Goliath could be probably at around 200 million already. If this was 2016, if we were up here or here when people were, or I mean here especially, but if we were up here when people were actually thinking, they looked for excuses to buy. If you see positive news releases which hikes up the chance of success or increases the blue sky potential, they would hit the ask. They would buy that stuff up. Now they're not. Now they are not. It's ridiculous. I mean, how can you complain about this sector? Can you find a better sector? Do you know a sector, right? I mean, there probably are some, but it's like where it's so obvious that a stock went up in value and price did not change. Let's say you have a car and they exchange the engine for a better engine or something like that. Price stayed the same. Would that not be an obviously a better buy? You're obviously stealing even more of assets, let's say, if that happens. Oh, I just got a even, you know, a faster car, same price. Obviously it came out better buy because it has, you know, well, it's just a better car. I don't know how to put it, but it's like, I hope you understand what I'm meaning. It's like, this is the best sector I've ever seen. I don't know when I will be tired of this sector. Because there's mistakes made all over the place. There is simply not enough. There's too many sellers right now that the opportunities get better and better with every positive news release. Imagine if Headwater just, you know, strings together even more positive news releases and price doesn't really change. We have no idea how, you know, the new value, let's say, the new risk-adjusted value might be climbing, you know, like this. And if price stays the same, it's just, you know, the future expected returns just go up and up and up and up. So if you're a buyer, you're taking advantage of the fact that the market is a retard. They don't see what is obvious. Well, they don't act on what is obvious. If we have a firm grasp of the obvious, we're going to do okay. And that does not mean that Headwater can't go down tomorrow or next week or next month. But the obvious thing is that, yes, it went up in value. And yes, mathematically, the market is probably a retard. But most people would rather be like Apple or whatever. It's like, oh, I think it's underpriced by 20%. It's like, wow, great. You found a 20%, that's okay actually. But in this sector, forget about it. It's just a single news release with no share price reaction. The future expected returns might go up 60% or 100%. This is the most insane sector there's ever been, I think. Because you don't find opportunities like this. And the opportunities only, the real opportunities, they only come when we're at these lows, because that's when the market is batshit crazy. Yeah, a long rant. There's a bunch of stocks I need to, get up to date with, if there's been news, etc. And I met companies up at Beaver Creek, so I have a long list of, due diligence to do, let's say. But it's like, hey, again, it's like I don't see many cells out there. It's like only degrees of bias, really. Anyway, consider me biased. I think I own shares of all companies mentioned, and well, not Bear Creek Mining. Assume I'm biased. Some are banner sponsors as well, so twice biased. And again, I can't guarantee that any company will be a big success, or that you will make money on them, etc., etc. But it's like, yeah, from a opportunity perspective, I'm pretty sure that some of these companies are just obscene, meaning that when the sentiment changes and they work out, let's say, we're probably gonna get way bigger reward than we should, because the market is way too pessimistic. It's discounting. It's basically retarded. So thanks for listening. Bye.